Time for business news, and the South African Reserve Bank's latest decision to hold the interest rate at 7.5% has been described as a relief for consumers who are servicing debt. The Monetary Policy Committee it follows the 3 consecutive repo rate cuts since the last year, September, I think to be exact. Business anchor Tumisang Ndlovu discusses this with us now, and she joins us from a dealership in Johannesburg. Tumisang Ndlovu, I'm thinking about those of us who are paying car installments. A cut would have been really nice. It would have gone some distance, but nonetheless, I suppose they will welcome a hold on interest rates. What's been the reaction?
You're quite correct, Xoli, and that has been some of the reaction that for ordinary South African consumers servicing debt, a cut would have been far more welcomed, but a hold is what we get from the Reserve Bank this time around. And one of the industries, of course, that feels the impact of adjustments when it comes to monetary policy is, of course, the motor industry. And I am joined by Thembinkosi Pantsi from Avari Cars to discuss this further. Thank you so much for your time. A hold will take, a cut would have been better, but what trends have you been seeing in terms of consumers maybe starting to have the confidence now that interest rates are lower to buy in this market?
No, thank you so much. It's great to be on your show. I think what we've seen as NADA is the shift in the market when it comes to vehicle purchase. A lot of people have been distressed post-COVID, and they haven't yet recovered from the COVID, I would say, downturn in terms of the economy. And what we've seen now is a trend shifting towards more affordable, more cheaper vehicles, as well as pre-owned vehicles. I mean, in the Q4 of 2024, TransUnion issued a report when it comes to ratios between new cars and pre-owned, whereby 1.64 pre-owned are being sold compared to 1 new car. And that shows that, customers and consumers, they're feeling the pinch. It is a tough market condition. People are no longer earning what they used to earn, and they're putting priorities on necessities. And vehicles are not the one. Yes, they do need mobility. However, the shift is towards more affordable vehicles, more durable vehicles, and also economical vehicles.
That's interesting because that shift in South Africa often comes with a battle of brands. When we say affordable, let's talk price ranges. What are ordinary South Africans looking for, particularly for the purpose of mobility?
Yeah. Look, I mean, we know South Africans, we like our brands. We like our German brands. We like our luxury. We like our luxury vehicles. However, the shift now have gone to the Chinese brands that have entered the market. I mean, last year and this year, we're seeing about 21 different models of Chinese brands coming into the country. And people are shifting towards your 500,000, 600,000, 800,000 sort of vehicles. However, at NADA, when we unpack the numbers, we've seen that, the pre-owned segment is starting to grow. I've also seen it myself with our business here, Avari Cars, whereby people who can't afford a brand new vehicle, they're shifting towards again, luxury premium vehicles, but in the pre-owned space. So it's a massive shift. And currently the luxury or the premium segment is really, really taking the beating.
Would you say the 3 consecutive interest rate cuts that we have gotten since late last year have had a significant impact, or it is maybe still a measured one, as maybe some consumers are saying, let's wait for further interest rate cuts before we get into the market?
Yeah, look, I think for the last 3 consecutive cuts that we've seen from the MPC, we've also seen some vehicles being sold, more vehicles being sold compared to, let's say, 2023 and also early 2024. So there's always, historically, there's a correlation between interest rate cut and also vehicle sales, whereby we see an upswing when it comes to vehicle sales once there's an interest rate cut. Hence, then I was saying that, there was a huge anticipation that we're going to get another cut again from many people, including us in the automotive sector. However, it didn't come. So we need to realign our business, look at the incentives that, the banks are giving, the manufacturers are giving, and also start to really push the pre-owned segment in terms of giving offer to the clients.
A forward-looking forecast then, it was pitted that South Africa is going into an improved situation with regards to activity and gains that would be made around economics. Is that still the view, especially in the vehicle sector?
Yeah. No, look, as NADA, we had a conference last week and we had an economist there from Westbank, and he gave us some positive news that we need, South Africans, we live on positive news, and they were anticipating that we should see a 2% growth in the economy in the country, and that's a positive one for us, because when the economy starts to recover, we also see that our businesses, our dealer partners, they also start to see their businesses, nudging forward. Automotive sector is a very, very resilient industry. We face so many storms, and any little tweak in terms of growth in the economy, in the market, is so much welcome. So for the future, we think that with the repo rate where it is at the moment, and also with the SARB trying to have a cautious approach in terms of not increasing interest rate, but continue cutting it or keeping it at the same level, is a positive sign for us. It means that we are heading in the right direction in terms of the economic recovery, which is very much welcome by consumers out there and also by us as an automotive sector.
Lastly, we received the budget earlier this month, and of course that 0.5 percentage hike in VAT is a big talking point. And for the sale of motor vehicles, how does that impact the industry? But at the same time, does it maybe become a bit of a difficulty for consumers?
Yeah, look, it's going to be a difficult one, and hence I'm saying, widely there was an anticipation that we might see another 0.25 basis point cut, to try and compensate for the VAT, and which has been increased. So going forward, we do hope that we will see some interest rate cuts. But as I said earlier on, the manufacturers of vehicles in this country and also the banks, they've got some incentives that have put in place for consumers to be able to get into the car market and also get the vehicles at the right rate, and also get trade assistance on vehicles that they want to trade in. So there's a lot of schemes in place. So yes, VAT will have some impact, but it won't have a severe impact than compared to an interest rate increase. So yeah, it's going to be a tricky one. However, as I said, we are a resilient industry, and I do know that we're going to come out of this.
Thank you so much for your time. Thembinkosi, Pantsi, they're speaking on the side of the motor industry. Resilience is what this particular market brands itself as, especially with the monetary policy in South Africa. The MPC deciding once, for the first time since September, to leave the repo rate unchanged at 7.25%, although there is hope of further easing later on this year, Xoli.